click the button. All right, good morning, everybody. Welcome to QuantBox Live, where we get a global macro on. It is, looking at the microwave, by the way, that's why I do that. 6:32 a.m. on Wall Street. 3 hours before the open of trading. I guess I got to bring the website up. That's part of the routine. QuantBox. Hey, my name is Wayne, by the way. Nice to meet you. Sorry, I'm an economist. That's all right. I'm also a trader and an investor, but I was a trader and investor first. Yeah. Then I got my macroeconomics degree because I was interested. That's my level of commitment. It's stupid. I know. 5 years of education because I believe macroeconomics is important to answering one question: risk on or risk off. So you got to take all this aggregate data and filter it down, boil it down, synthesize it down to, am I an investor or am I going to cash? Huh? You answer one question, you answer 10,000 questions. Very cool. So anyways, macroeconomics is what we do. We automate the process, we gather it, we organize it, okay? And we make it easy to understand so that we can make intelligent decisions. And wait, what? Something's new. There's a professional trader monthly subscription. Whoa, no way. And it's the same price as retail. Yeah, so if you used to pay $79 for a light version of QuantBox, I just gave you everything. I gave you everything. I gave you everything. You now have everything. You're welcome. Everything. It's done. You got it. Okay, much more accessible for a lot of people. And that's why I did it, because we already built it. So now I would like people to use it. Okay, it's still cheaper to go annual. Cool. Hey, you're welcome. The other thing to announce is we have started an major upgrade to QuantBox. If you attended last week, I asked you, do you want artificial intelligence to sit and watch QuantBox 24 hours a day and notice if Kiwi yen went from neutral to buy, or maybe it went from neutral to sell? What did USDZAR do? What did this do? What did that do? How do you watch all this stuff? Well, that's just one page, but that's a great classic example of, like, that's good information, but you don't know how things have changed over the weekend or over the day. So anyways, we have started a process to build AI to actually watch everything on QuantBox and report to you instantly. So now you're just in boss mode, where you have access to all the information. You can do all the research, but now you have an automated process of which artificial intelligence will read it all and say, hey, guess what? This just changed and it's important. You should check it out. Cool, that's happening. I also added Bitcoin. Yeah. So anyways, lots and lots of upgrades for everybody at QuantBox. So thank you for being part of this revolution, changing the way you trade. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. By the way, how's the sound on the microphone? It's better than it was in the past, right? A little bit better? Do you know why? I bought this stupid expensive microphone and the sound was terrible. And I played with it. Then I bought a new mic, and now this one works fine. Yeah. Thank you, world. Isn't it funny? Murphy's Law, right? So now I got this microphone back there. Murphy's Law, Mr. Murphy. Okay. Cool. So I guess I got to add a way for people to upgrade to the AI. But once again, for those that voted with their money last week, they said, Wayne, build the AI. They prepaid for a year in advance. I appreciate that. Thank you. It helps cover the cost of this massive upgrade. Thank you for doing that. And for everyone else that wants on, they're going to have to invest more. All right. It's going to be exciting though, huh? Okay, oil all the way back. Massive rally that last week, right off our support line. Hang on, let me get my my oat milk. Ah, all right. Yield still nice and down. I'm very happy here. Oil popped. I think this is the one that people are not worried about. I think this is the freight train that runs our economy over. Remember, right now, the market is playing like the Fed is done and the worst is over. And by March now, March, the market is pricing a Fed cut. It's like one of the dumbest things I've ever heard. But that's how I read the data. Is it possible but that institutional investors are not doing their homework and they're actually investing based on their guesses and their wants, their hopes? Is it possible? Scares me. But the long I've been doing this a while now, and yeah, probably about 15 years ago, it started to occur to me like even the institutional investors don't know what's going on. It's wild. So, anyways, what happens to inflation if oil goes back to $90? Then all this irrational exuberance is gone. It was a mirage the whole time. We crossed the desert to find out it was not a pool of fresh drinking water. It's a mirage, I think. And the biggest thing to pull all this exuberance around from turning the market from bullish to bearish is if oil skyrockets. And there's nothing the Fed can do about that. But if it brings inflation up, they raise interest rates and then the whole narrative is reversed. So be very, very careful. I got it. I got it. I got it. There we go. Boop. All right. So anyways, that scares me. And just recognize, I think, the importance of this. And it's not that it's up 1%, it's up from support. When you get the bounce at support, it's the confirmation of support that's important. Okay. So we'll have to look at that. Gold didn't have the guts to break 2000. Remember, when we analyzed this in the swing trading group at Investor Bootcamp, I gave 3 reasons why it should go to 2000, but I couldn't give you one why it should go above 2000. So, anyways, looks like we hit 2000 and it stopped. Yeah, that happens. Uh, this is a short and holiday week in America. We have Thanksgiving. Canadians are like, we already did all that. Yeah, yeah. Well, now we got to do it in America. As a Canadian, I must say, hey, America, your Thanksgiving is too close to Christmas. You can't have the entire family over and then all these, then they show up again. Like it's like 3 weeks later, they're back asking for handouts. Hey, can I have a free meal? Where's my gift? You're like, dude, you were just here. In Canada, we got at least you got space where you kind of almost miss them. Right. So Canada's got it right, I think. So, anyways, good job, Canada. Right. Yeah. Good job. Anyways, Canada's got it right. That's all I can say. So we're going to have a short week. There's no trading on Thursday. Thanksgiving's always on a Thursday. Why? Nobody knows. Nobody knows. And then Friday, see, it's complicated. You should just have Thanksgiving on Friday. because now you can't trade. See, in America, you can't have the stock market closed for 4 days in a row. So some knucklehead put Thanksgiving on Thursday. If it was just Friday, then Friday would be closed and then Monday would be open. You'd be fine. So, anyways, Thursday's closed, Friday's open. Some of the markets, not all of the markets, which makes it confusing. And no, who's there? What, the interns? Who's there to trade? But nonetheless, it is open. So it makes life a little complicated for us as traders and investors, particular global market, because Japan doesn't care that it's the Friday after Thanksgiving. But anyways, there won't be any live streams Thursday and Friday this week. That's one thing to note. The second thing is be careful, because the markets will still be open as a Forex trader. And usually nothing happens. Okay. Right? Usually nothing happens, but things can happen. So plan on not trading, but watch the market for risk management. How about that? Bitcoin back on, everybody. Game on. And we're talking about that, how to use the scatter plot. And Bitcoin was down and now it's up. So that's why you buy dips. It should be interesting to you if it's down. But anyways, take a look at risk gauges. How does the world feel right now? Well, we're not sure. If I were to guess, the stock market's going to rally. And here's my rationale for that. And by the way, it's a guess. It's nothing like I see on QuantBox it's going to rally today. No, the stock market's too simple for that. It'll rally for no particular reason. Well, this particular reason, I think it is going to be related to Microsoft. The idiots at OpenAI fired the founder. All right, well, it's a free country, I guess, but right? Yeah, come on. Um, but I think what it came down, they're not willing to say it, but he's the founder of AI, so he's really focused on doing AI. And he's, for some reason, the board was built in such a way that they're really worried that what he's doing will take over the world and we'll all be slaves to machines, which is a reasonable fear, but they might be overly fearful, or they're not sharing, like, well, here's the craziness that he's been doing. That's why we fired him. He was playing with the blocks of life, right? Like, no, they're like, they fired him. We're not going to say why. So it seems to me more fear. I don't know. I'm not on the board. I don't know what he's doing, but he's building AI. That's what his job was to do, right? So, anyways, the board got freaked out and fired him. Microsoft got him. Boom. Remember, Microsoft owned 50% of OpenAI, and they've bet billions of dollars on putting AI into Microsoft. Right? Billions. And they're like, we need to beat Google. We need to beat Apple. We need to beat all these other big names. We need to be in AI. And now they basically just bought OpenAI, the company. They own half of it, but they got the other half for free. Now, what do you think? The founder and co-founder, are they going to make a nice salary at Microsoft? Get some nice Microsoft shares? So, dude, I mean, everybody won except the board. OpenAI is probably just not a company anymore. You watch, 50% of the whole company is going to tiptoe over to Seattle, go work at Microsoft. So, anyways, good job, Microsoft. And I hate Microsoft. But anyways, that will actually be good news. Now, Microsoft now just owns that, right? So now people are probably going to like it because now they don't have to invest, they own it. So now it's Microsoft intellectual property, which means they're a bigger, better, badass competitor in the artificial intelligence community. So game on, right? So does Microsoft? No, here's what I'm getting to. When you look at the baskets of what we trade, like the S&P 500, the Dow, the Nikkei, these types of things, they they have Microsoft in them, right? And is Microsoft a heavy weight in those baskets? Yeah. So if Microsoft jumps 3.5% today or five, well, probably risk on. The real news this week, though, economically speaking, is the meeting minutes, Fed meeting minutes. Cool. You guys getting excited about the Fed meeting? Yeah, come to Nashville. Come to the party. I'm telling you. Yeah, it's going to be super huge. It's going to be massive. We're going to have like a cocktail party with over 5 people. It's going to be great. You should come. Should hang out. We'll have celebrity guests if you consider me a celebrity. And then what else? We'll talk economics. It's huge. It's massive. It's like the Super Bowl of economics. Yeah, we're gonna have super fun. All right. What I actually was thinking when we were talking about the FOMC meeting minutes, I was thinking about we're going to do something similar where in I don't know, sometime next year we're going to meet in the room where the Federal Reserve was created. Huh? I mean, like, trust me, this place is awesome. All right. Mm-mm-mm. All right. Bitcoin's way up. Okay. It's way up, but notice it's expected to be up, which means when it was down, it would have been down here, let's say last week. And when you see things that are bearish and unexpected, either something has changed or it's just a dip. And if you're a bull, you're supposed to buy dips, right? So everything to the right are things that QuantBox says is bullish. And so when you see things in the red, you should then move to the charts and look for opportunities to buy dips. And that's what happened to Bitcoin. Big payoff. Okay. All these things are doing okay. Now, most of the time, things that are over here, again, they're on that quadrant because QuantBox gives them a positive score. But they're down there because they have negative returns today. And most of the time it's a dip because most of the time things trend. So you're looking for the dip. And so this is actually where the opportunities are because they should be going up. These are already up, you see? So you can buy these, but it's mediocre. They have already moved somewhat. The real opportunities are here. But like I said, every once in a while, it's actually something has changed. Usually it's not because usually things trend. Um, this this move here, and this is the other big news of the moment. I covered this at the day trading group yesterday at Investor Bootcamp. Yesterday, Sunday, we were talking about this. I said, start reading everything you can about the Japanese central bank and even their politics. I think this could be it. I think this could be the top. I think this whole yield curve control that we've been enjoying for 2 years might be over. Okay. It could be over. It might be over. Do the research. Will QuantBox have it? QuantBox does economic data. But I've been pointing this out, and now we're starting to see serious rhetoric in Japan. And what I did yesterday in the day trading group is I went through a bunch of these yen pairs, and they're all very toppish at a time when the narrative in Japan might actually be changing. And I'm like, this is no joke. That M3 projects that we're on our way to 147. We were at 152. Okay. Oh, 500 pips. Yep, 500 pips. Don't miss it. Don't miss it. Don't stare at it. Huh? Don't stare at it. Do I have that picture? I don't have that picture. I should leave it on my desk. It's a good memento. What did I do with the picture of the burning car? Anyways, don't stand there staring at a burning car. You got to do something. So be careful. This could be a game changer. Now, it just might be. I don't know. I don't know. But it appears to have a negative slope. Tim says he can't travel yet. When do you think you'll be able to travel? Like 6 months? But the end? Maybe like 1 year from now? We'll do New York City. I think it's in the June meeting. And then I believe we're going to do Jekyll Island probably September. Yeah. Tim, the September one is to me a game changer. The history is really really amazing. I mean, it's like a target to aim for, kind of thing. Let me show you this place just to set it up. Let's see if they have a hotel packages. Hey, they have a beach. Yeah, I don't care. Beach is nice though, because the hotel will put together a little basket for you. Okay, what's wrong with their website? Hello. There we go. So look at this place. On a nice warm, like these magnolias. I'll never forget the magnolias. Have you ever seen a movie where they're walking down through the magnolias at night and they're incredible trees? This has that, like the most incredible magnolias you've ever seen, hundreds of years old. But so I rented this penthouse, like I rented this whole thing, and the night before Ben Bernanke was there, stayed in the room. And so anyways, so that night I went up there's a little spiral staircase inside the room, and I went up here. I went outside and smoked a cigar with because this was JP Morgan's room. That's where JP Morgan's this was his hunting club. So he would stay there, and I'm like, boom. So I got so excited. I rented that room. Ben Bernanke was secretly in the room. There was a secret Fed meeting going on and everything. They even gave me a mint julep because he was still there. And so, anyways, he didn't check out on time. So, anyways, I had to wait. And later that night, I went up the spiral staircase and smoked a cigar up there by myself, just me and JP Morgan. It was really cool, just me and a ghost, right? And I swear to you, just to set it up, it was night and there's nothing but bayou out there, kind of, I don't know what you call it, marsh as far as you can see. And way off in the distance, lightning. Right? Just you're watching the lightning. I'm like, wow, this is so cool. So you got to see this place. It's old. It's old. If you like old stuff, and I like old stuff. Uh yeah. Yeah. Yeah, like look at some of these trees. That's the moss hanging. So anyways, oh, you read the what's it called? The Monster of Jekyll Island. So anyways, we're gonna go there. I even brought a sweater to do this, but with the V, but we didn't actually do it. Look at this place. Yeah, drank too much there. Yeah. So we'll get one of these rooms. See, look at these trees. That's the oak. Oh, it's crazy. So we're gonna go. We're gonna go. Show a meeting room. Show a meeting room. Oh, look, no one's ever gone into that room. All right. Mm-mm-mm. It's in a creepy old basement. Anyways, Yeah, well, there's a nice meeting room. I thought they would show the Federal Reserve room. Yeah, it's not going to be there. No, gallery again. Weddings, ocean club, dining, meetings. Maybe they'll do it under meetings. But anyway, so if that have that as a target, Tim, like you're like, right, get everything ready for that. Meetings. Let's see. Which room is it? No, 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 not that one. Nope. I think I recognize that's the oh, there it is. It's not bad. That's it. That's the room. If you look at the old pictures, you see them in the room, right? It's kind of cool. And next door to it is another meeting room, and that's not it. The Pulitzer room. Remember the Pulitzer Prize? There it is. I actually like that room better, but anyways, there you go. Everyone, if you want to see this place, yeah. Remember, if you're a corporation, it's a tax write-off to do something like this. So, anyways, cool. So we're gonna go. It's awesome. Going back to these this stuff, I'm really, 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 really concerned that the whole yield curve control is over. You should be prepared for it. Look at just since last night. I drew all this out last night. I'm like, get ready. This is like seriously, probably, possibly, not probably, possibly all over. We have to pay attention and gather the information to find out what happens, right? Because here's what's hard when you're a bull. And something in particular, fundamentals have been up for like 2 years, right? So at some point, though, you have to stop buying. It's very difficult. It's very, 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 very difficult. But I would start putting in some rules now. At what point do you stop buying dips? Okay. Just have a hard and fast rule now. Now, even beyond that, I mean, imagine you had $1 billion portfolio and you've put a lot on all of these yens. When do you go to cash? You know what? It's nearly impossible psychologically and emotionally to go to cash. Well, you've put everything on this. You've been on it for 2 years. You've been talking about it for 2 years. You have all this money. You've made all this profit. And you know what most people do? Ride it all the way back to zero. That's what most people do. Do you know why? Because it's incredibly difficult. So while you're still, let's say, not drunk on emotion and fear, you have to say, where's my kill switch? What takes me out? Okay. And do some research. And if the Bank of Japan and politicians are seriously thinking about ending it, you should know. You should know. You should do the research. You should start reading Japanese news and then combine that with technicals. So this is bullish, right? For sure, that's bullish. Well, what if it comes down to here? What if it does that? Like how many hundreds of pips are you willing to risk? Okay. So my advice to you is think about the behavior you would like you would advise yourself in the future. How would you like to behave in a scenario like this, especially if you had a lot riding on it? Okay. This has been going up for 3 years, really. Enrique says, yeah, is it a worry that they ended it without announcing it? Well, the market thinks ahead. So if the Bank of Japan is thinking about ending it, yen weakness is over. The market wants out. People are taking profit. They're like the big smart money are like they're going to cash. And everyone else sits there biting their fingernails. Okay. And then it triggers stops and so on and so forth. So it's the future expectation of the end of curve control that ends it because other people are already taking profit. They're moving first. Okay. And maybe, one trick in sort of risk management, well, let's say you have trades on from here. Do you exit those today? No, but what about the trades that are above this line? Okay. Or any trades in this zone down here. Well, maybe you take profit on all that. You take the money and run here, and then you see what happens, right? Because you're like, maybe it goes, right? Maybe it continues. So you don't kill these, but you exit those because they're most vulnerable, and then you come up with a contingency plan. When do you know when do you make your change? Um, but it seems to me something is happening. So like Swissy yen, but I showed you like the pound yen. Like look at today. Boom. I mean, look, we were at what do you want to call it? Basically 87. And we're on our way down to 84, 184. It's a 300 pip move, most of which is today. Today. That's a massive move. And it's happening. This is real. It's happening. Okay. And then you look at this one. Okay. This is happening. This is the last 3 days. Okay. It's dropping 500 pips in a week. 500 pips on a USD yen is a lot of pips. Euro did the same thing as many of the others. What about Aussie? Okay, it's still very, very bullish. Is it going to continue to be if everything else is falling? I don't know. So you start once again, you say, okay, well, this is bullish, and then this is bullish. So at what point do you end your bullishness? Because if we were doing technical analysis, I think you would plan for something like this, right? Cool. Seems logical. So how do you behave if that doesn't work? Well, someone else would buy here, and then they would buy here, and then they would, and all of a sudden they're buying on the way down as it's falling, and any money they made last month, they give it all back this month. Okay. And, and I've drawn all this out last week, but I'm like, dude, guys, seriously, look, it's important. Look, it's toppish, right? And now the big thing is, has the narrative changed in Japan? Well, we do know somebody based on a double top at annual R1 took profit. So maybe it's just short-term profit taking and all that kind of stuff, but pay attention to the possible end of yield curve control. So I I would recommend you spend more time this week researching just the news flow, okay? The zeitgeist of Japan. Be more Japanese this week. Try to figure it out. What's going on in Japan? Are they losing tolerance? What I suggested last night was there by weakening the currency, it makes their products more affordable, therefore more attractive to foreign buyers. Everyone else outside of Japan, right? A Japanese car is cheaper in terms of yen if the yen is getting cheaper, cheaper, cheaper. Or another way of looking at it, dollar looks stronger. Dollar buys more yen. So to an American, when with yield curve control, a Toyota or a Honda is just cheaper. And it makes when you're going to buy a Mercedes, right? C class, or you're going to buy a BMW 3 Series, or you're going to buy a Honda Accord, right? Um, Great. So now you make these decisions. But what if you were weakening the currency and people were still not buying your cars? Well, then you have a domestic problem where there is inflation, which Japan's never gone through before, and people are probably worried if their economy is bad, their currency is weak, and nobody's buying their stuff. All of a sudden, what is the strength is a liability. Okay? Like, have you seen the movie World War Z? Brad Pitt is a scientist. Yeah, seriously, try not to laugh. Anyways, right. He's a scientist, and he's saving the world from a zombie apocalypse. Yeah, and they have this character who's a scientist, and he's only in the movie for 5 minutes, but in 5 minutes you really have to believe that this other scientist is a genius. So they're like, blah 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 blah, he went to Harvard, blah 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 blah. So now it's established the kid's a genius, right? But what he says in his one speech in the movie, um is that nature hides its weaknesses and promotes it as a strength. And so throughout the movie you learn, right, that the zombies don't attack people who are sick, like with cancer, because they don't need them. The person's not going to live. It would be a bad host for the virus, right? So, anyways, so then that that's how they figure out how to beat the zombies, right? Is that they don't attack the sick. So all you have to do is disguise yourself as being sick or whatever. Sorry, I just started the whole movie, but it's all right. It's only a Brad Pitt movie. In this particular case, there could be a switch where now this strength of yield curve control might be now a weakness, where it's worked its way through, where after 3 years, there's no return and there's only a cost. And they might be in that situation. And, it's right at the psychological level of 150 on the, USD yen. So there's something big going on, I think. And they might just say, the cost outweighs the benefit at this point, and it's run its course. Yield curve control is not producing what we need, it's only harming us. Now, that's what I suggested last night. Read a bunch of articles. And the cool thing is, lots of different media outlets write about it. So you probably will end up at Reuters and Bloomberg and CNBC and places like that. Maybe Financial Times. You might want to look at I don't care. So plan for it being ending. If it ends, at least you can go to cash. And then if it's not ending and it rallies back up again, sweet. Buy a dip. But do not watch it fall 1,000 pips, especially if you're long. Right? Right? Especially if you're long. So be open to the fact that this is all coming down. Will it actually all come down? I don't know. Aussie yen and a couple of them don't look like it. And many of the others, like pound yen, definitely look like it. Okay. Tim says, why would we not short? I didn't tell you you should or shouldn't. I'm just like, recognize it. So if you were a $1 billion hedge fund, you probably are long every yen pair. But if you have no trades on at all, right, then you're like, okay, well, I'm going to go short pound yen. Yeah, okay, that's cool. It's bearish today, maybe bearish this week, maybe bearish for a while. But much of the market institutionally is like heavily long. And I want to emphasize how difficult it is to make that decision. And some people are making the decision. That's the smart money. And everybody else does nothing. And that's somehow human instinct to just stand there and stare. But you have to be better than that. Okay. Do I recommend a particular Japanese? No, Japan is well covered. The thing is, like, the average person is just not paying attention to Japanese news, and so Japan, in particular, in Japan, that they heavily want to talk about politics and the yen and the central bank. It's no different than what we do, in the United States, staring at the Fed all day, talking about the Fed all day. Um, you just have to reach out one sort of extra step and just say, go find that and go read that now and pay attention. And really, this is important, like, because it is a fundamental change. And so to be able to say, what I'm trying to teach is that you know what to focus on. Most people just fall into a routine. They've tracked their three favorite their three favorite currencies, and they just trade them every day because they like it. Oh, let's do some euro kiwi today. Why? Oh, it has the greatest average true range. I'm like, okay, look, the thing to focus on right now is potentially a major shift in economic policy by an entire major currency. Find out if that's true, and you will be rewarded. Okay. So I'm reading this. I guess it's still outside. I'm reading this book on Japan on samurai swordsmanship, and it literally says, "Do not favor any weapon." You're going to learn all these different weapons, and you have all these tools at your disposal. You should never, ever, ever have a favorite. If you're truly a master, it doesn't really matter to you because you're so well practiced. You're so well disciplined. Really, it's the discipline that they talk about. It's not the skill, it's the discipline. And that you're in the right mental place and the right emotional place, and you are disciplined. So you have practiced everything. It doesn't matter, spear, bow, all these different things, long sword, short sword, it doesn't matter. Same thing like when investing and being a trader, you should not have a favorite currency pair. That's not what matters. It doesn't matter to you. It just, and really, you don't even need a favorite. Like, I like RSI better than MACD. Whatever, dude. Right? Like, that should be completely irrelevant if you know how to use the tools properly, right? And so, in this case, the thing to focus on is what I've indicated. Is there a change in this major currency? And a master would say, give me information. Let me find out. I want to know what's going on at the government level, the right politics will impacts things. I want to know what the Bank of Japan is thinking, and more now than before. You're gobbling up information about Japan. And I'm trying to teach you that that's your mastery, right? You're always searching for the truth. and there's nothing disguised as your favorite, and you're not asking MACD to make financial decisions for you. That just measures the distance between two moving averages. Irrelevant, really. Should you be buying the yen now after selling it every day for 3 years? Are you a buyer now? That's a hard question to answer, but it's the one thing. And you get that one thing right, the other, 10,000 things. You know now how to use MACD. You want this way. You know how to use RSI. You want that way. You know how to use moving average crossovers. You know that way. You know how to use Fibonacci, lower highs, right? Because you think it's heading down because of your research. So you just have to figure out that one thing. In the book, the Samurai Strategy book is all about, if you know the one thing, you know 10,000 things. Yeah. So yeah, that's my gift today, is get your focus on, right? And go figure out, is that happening or not? Everything, like, look, if this drops for the next, let's say, just 6 months, doesn't matter if you use MACD or RSI, does it? Doesn't matter. You're selling lower highs, and all those other things just help you do that. What's a lower high? Yeah, what is a lower high? What's better? MACD, RSI, right? Stochastics, Fibonacci. They're all different measures of, is this a lower high? Ultimately, all you need to know is, are you a bear? And how does price action work? Everything else just measures price action. So again, when it comes to being a trader, all you need to know is price action, technically. And everything else are just tools to help you measure price action. So to know the one thing, price action, means you actually know 10,000 different things. You know how to use every indicator ever invented. When you do this drop down of, like, indicators, all of these things, you know them all, right? You know every single one of these things, because they're all measuring this, helping you measure the same thing, price action. None of them tell you to sell the lower high. So you got to figure out the lower high. You got to know price action. Everything else is just else. Yeah. So anyways, let's go get the day. It's going to be a short week. Remember, either nothing's going to happen this week, but I don't think that's going to be true, or everyone's got to get their trades on before the holiday. So Monday, Tuesday, Wednesday could be high volume days, and then Thursday, Friday is just crickets. Okay. And the scary part is these yens, when the market is weak on Thursday and Friday, these are when every yen pair could drop 5, 6, 700 pips. Well, nobody's looking. Well, we'll be there. Okay. And some poor intern who's working Friday will probably be buying the Japanese yen because his boss has been buying Japanese yen for the last 2 years, making money. And then it'll be falling. He's like, I'm just doing what the senior trader's been doing. And we'll be buying the yen as it's falling. And then they'll come back on Monday and they're like, what the hell happened to the yens? Huh? And the intern is shivering in the corner like a chihuahua. Yeah. Tough day of the market, right? Yeah. So anyways, could be an interesting week. I've seen it. It's happened. Peace on earth. May the pips be with you. May our profits be above average.